Let's move on to the market and quickly take a look at what's happening. So 22,925, we're basically back at the lows that we were talking about earlier. This is the point which the market, I was saying earlier, defended once. Once this level has been defended, and then the market came back above the 23,000 level quickly. So will we be able to do it one more time? The only difference is that you've got US futures which are lower. I mean, between 1 and 1.5%. At that point in time, US was still sort of nicely cruising along, and the market here was just sort of falling on its own weight. Domestic, local reasons. The Sensex is down about 0.75%. You've got the IT index, which is down about 1%. Look at the Nifty heat map. Everything is down except about 5 or 6 names, which are starting up in the green. 22,900 on the index. Surabhi.
Okay, there's a lot of pain in the mid-cap market, and that was the story of last week. It's extending this week. The mid-cap index is down 1.5%. Which means the fall is almost double the large cap screen. We'll come to more mid caps and what's sort of under pressure over there. But the casualty of the morning, Nigel called it properly, was Credit Access. That stock's down about 14%. Now, with that headline out of the way, let's see what's bruised the Nifty. BEL is down 2%. IndusInd Bank is down 2%. Let's look at the reaction on ICICI Bank. ICICI Bank is actually up 0.5%. Pretty decent performance. And good numbers as well. JSW Steel, despite a good show, I mean, there are global headwinds this morning. So stock is lower by about 0.7%. Let's check NTPC as well. NTPC is the other result reaction, 1.5% lower on NTPC. So it's an overall fall. Infosys, Trent, M&M, BPCL, Tata Steel is cutting across sectoral lines. Nothing's holding up, at least for the timing, till some some semblance of stability comes in. There is a little bit of buying in FMCG, Britannia, Lever, Asian Paints, ITC. They are either flat or slightly positive. And then there is Dr. Reddy's. Apart from that, everything is down for the time being, and the markets are still trying to find a base.
Well, should be a couple of stocks are doing well. So let me just highlight them. DCB Bank, we had the NIs that were up close to 15%. And the gross NPA cooled off as well. So the street has taken note of that. So that stock, in fact, is doing fairly decently this morning. I think it's up close to around 8% actually. So good going on that particular name. On the flip side, a few more stocks that should come up for you on the screen. Pull up JK Cement. Let's see what that stock is doing to kickstart trade. That should come up for you on the screen. The numbers are pretty okay. The mood of the market isn't that great.
0.5%
but I think that one's up. It's up close to around 0.5%. CRM Silk Mills, not too high volumes, but that stock is down close to around 8%. Newgen Software is down close to around 8% as we speak. AU Small Finance Bank is taking a knock. And CDSL as well, I think they came out with a set of numbers. That stock as well has now lost close to around 6.5%. Remember, these are some of the stocks that did very, very well, but now they're pulling back a little bit. We'll have the management of Torrent Farmer as well that will join us in just a bit for now. So let's see what the initial take is out there. The way ahead is something that the street would like to know. For the time being, the stock is up close to around 2%. I think they're guiding for better margins in Q4 and from here onwards. And they're also seeing some kind of ramp up in their business. So a start in the red, 22,900 is defended. Can the bulls fight back? We'll have to see who's going to put their hand up and stand up for the bulls. The Nifty Bank as well at a very, very crucial level. 47,800 is from where we bounced last time around. We'll have to see whether or not it can defend that mark.
The interesting thing is that with budget, usually if the market runs up ahead of the budget, after the budget, usually the reaction post-budget is negative. Budgets are rarely positive events. Market ends down, and of course we had that capital gains tax event. It didn't last very long. But this time, I mean, the market is already cratered sharply going into the budget. And expectations in any case are running low. So that's a potent recipe. But of course, something has got to come from the budget, right? So it's actually both fronts now. The chorus for the RBI to do something on easing liquidity. And of course, I mean, our colleague Latha, for example, wrote a piece over the weekend sort of describing the demands and potentially what can be done, the options, etc. So something on liquidity and of course something from the government side, right, to arrest this cyclical slowdown. Can anything be done? Some relief be provided to the middle class, etc. So those are bigger questions that I think we'll need to track over the next fortnight or so. I think
before Prashant, you get into the market conversation, just some context. I mean, I looked at the numbers. We know this, but when you read the number, it really hits you. It's been a tumultuous start of 2025. The Nifty is already down about 3.5%. The mid-cap index is down 8.5%. The small-cap index is down 12%. So it's been a crunching blow. And I think this is the real question of a lot of the retail money as well. And we'll have those questions and those trends play out. whether now retail money can still keep the faith and keep the buying going, because now is when, I mean, you're seeing your profits down 25-30%. So what will people do in the event of such a decline? And it's the one that we're in the midst of even now.
Absolutely. And so far they've kept the faith, and the money is kept sort of rolling into mutual funds, etc.
And history suggests that this is normally the best time to keep your SIPs going, right?
Yes.
I mean, personally, I'm doing that, so I'm backing myself.
Yeah, absolutely. And the SIP book, I mean, actually the discretionary book in terms of mutual funds has been up and down, but the SIP book has continued to remain very steady. And that's basically, I think, about 85% of the money which goes into mutual funds is through the SIP route, not the discretionary route, which is essentially lump sum based on what the market is doing, etc. So it's systematic plans which have kept things going. You got some bond market flashes there. 10-year yield has fallen to 6.64 versus Friday's close of 6.72. So that's interesting. And we'll have to sort of look at this a little more closely. 86.36 on the currency. I think though that is, the dollar is a little stronger as compared to the last close. We'll have to just sort of put these into context. But, I think a noticeable fall coming in on the 10-year benchmark as well. Okay, markets recovering a little bit. We're back at about 22,950.